Welcome back to another video. Today we will be talking about nano dimensions. We got some huge news about NNMD. The CEO of Nano Dimension actually had a lot to say about their new deals, and some of these deals are huge. An example of this is Nano Dimensions for military applications. He talked about their deals and have a bright future ahead for 3D printer market. Their earning reports also came in that gave them a huge boost in share price. Nano Dimension stock is about $10 right now. It has been going up for the past few days, and the stock actually went up about 50% from the lowest point it was last week. Before we get into everything, please hit the like button and subscribe if you do find this video helpful. To start off, I wanted to talk about the stock price. Even though it has gone up massively in the last few days, it's a lot lower than its highest price of $16. And from $10, the upside to $16 is 60%, which is a huge upside for one stock. They are doing really great right now, and the stock is still undervalued. Recently, they had their earnings and they reported a revenue of 1.97 million just for the fourth quarter and over 3.3 million for 2020 overall. They also had a huge interview with Redchip. The CEO of Nano Dimension gave a lot of good points about the company, and they are getting a lot of applications from many different companies, and this is including the military. Just take a look at this.
Yoav, thanks for being with us today.
Thank you, Dave. Nice being here as usual.
Well, I want to begin today with your giving us a basic overview of your technology.
Okay. So what we do is we build a machine about the size of two home refrigerators. The uniqueness of this machine, and it's a really transformable machine, that is the only machine in the world that's using three-dimensional technology to print two materials at once, one dielectric material and one conductive. And from the other side of the machine comes out an electrical device, highly sophisticated, miniaturized, that works. So from one side, you enter a digital file. From the other side comes out electrical device. Nobody can do it until today. A lot of people are trying.
Give us an example of a couple applications for, say, the military.
Well, it's true for military, it's true for aerospace, it's true for medical. When they need what we call high performance electronic devices, HiPads, which you can use different names, say very sophisticated printed circuit boards, very high end. And let's say they need a RF antenna connected together with the electrical circuit that operates the antenna, and also connected to a battery that makes sure the antenna operates right. And you want to do all of it together in three-dimensional, including printing the antenna, printing the electronic device, and printing a base and a little box where the battery can get in, be connected, and everything is printed at once, other than the battery, which is being added afterwards. That's a very good example.
You have nearly $1 billion in cash. You've hired two very good investment banks, including Nndm. Talk to us about your acquisition strategy.
Okay, since we actually, you're right, having that, and we've developed this over the last four or 5 months, since we started to raise money, and since we started to feel that the market and our investors are really believing in the concept and the vision we're having, we hired Nndm and another European bank, and we looked at two types of acquisitions, which by now, through searching, I think I scanned over 85 companies, which is a huge amount. We have serious candidates. Type A is large companies relatively in the traditional PCB industry, but in a very, very high end of this industry, which are still on the ground in Europe and the United States, and are serving the defense community, the medical community, the aviation community, the aerospace community. It's exactly corresponding to our target market. And those companies, there's about, I would say, 15 of them in the United States, 15 in Europe, because the rest of all this industry went to China. Those companies are targets for Type A. The reason we want to buy in Europe and the United States is we are actually buying an existing relationship with customers, distribution channels, and eventually we're going to populate all those with our technology. Type B is, there's many more companies, but they're smaller. And those are companies that have very, very promising technologies. Some of them are aiming at the same thing we are aiming, trying to compete, but they are coming from different angles, and we see in a vision of 2-3 years from now that those technologies will be integrated into our product offering. So we prefer to buy it now rather than to risk an R&D. So we're looking at about, I would say, 3 or 4 companies like this in Israel, 3 or 4 in Europe, and 4 or 5 in the United States. That's the type B.
What does the revenue look like on some of these targets?
The type A revenue is between $50 to $200 million per company. The type B companies are revenue between $2 million to $50 million each company.
Okay, and will you use all cash or you put some equity in these deals?
No, I would prefer not to use all cash. The fact that I have cash gets me in the door very fast. These people pay attention immediately. The fact that I don't want to pay cash in some cases because I want the management of the company to stay in, I want the management to be compensated and based on the upside. So I want to combine cash and shares and also to get to the right price. I will add one more thing that people should know, I'm sure they know. The SPAC, call it tsunami, with 200 SPACs running around the market, 95% in the United States, if not 100, caused the prices in the United States to soar because those SPACs are totally not sophisticated as much as paying the right prices, especially when they get to the last leg of their career, and their career is usually 2 years. That's when they start to raise prices. So I'm very careful not to be pulled into this ridiculous race of a rat race of paying too much. You know, it's a rat race, and even if you win, you're still staying being a rat. So I'm not going to pay an overpay. We are really carefully choosing the acquisitions, and therefore looking at Europe. There, it doesn't happen because there's no SPACs campaigns there.
In a recent press release, you provided shareholders a year-end 2020 update. What were some of the most important accomplishments that you're most proud of?
Well, the first, and I guess I would say important accomplishment, which surprised me to be very frank with you, is I expected the revenue to be really low because people would not buy machines during the time when Corona is there, and Corona, by the way, is still there. They can't buy machines, and it's understandable. Capital gains are limited, if not zeroed out. So I thought that the revenue will go really, really low. We ended up with revenue half of last year without selling machines almost. We sell machines the last quarter because things in Pacific Rim started to kind of come up. So without selling machines in a big way, we sold a lot. That actually proves very important concept in our business model. First of all, our customers are buying material, which means they're using the machine, consumables, the razor blade, the razor and the razor blade. Secondly, by now, 70% of our customers upgraded their old machine into the new machine that came up end of 2019, which means they like the machines, they like the technology, they believe it enough to pay more and to get a machine that's 24/7. So that, I think, is a very important achievement and proof of concept. It's really proving that we're in the right direction. Secondly, we started nano services, which means we are now giving services to our customers. Those who don't buy the machines because they need to wait until Mr. CFO will release their budget are saying, okay, guys, so at least you do for us what we would have done with your machines. And we'll pay you $5,000, $10,000, $20,000 per round of prototyping. And the revenue is growing from that services. We call it nano services. But the revenue is not the point here. The point is that our customers keep in touch with us. We keep in touch with them. And after spending $50,000 or $40,000 next year, when the Corona will be over, it'll be a slingshot effect when they'll buy the machines because by then they know the technology. So that's the second achievement. Third achievement is what we described with the M&A. We still didn't announce one, but we went far away in scanning the horizon, understanding who is playing, what are the prices. A lot of work was done and a lot of effort were invested, and I think we reached a very, very important point. There's other achievements that we announced lately for last year. We have developed relationship with customers the existing customers that end up with new applications being developed, and we're really looking forward that as we advance during this year with our material spec and are getting better, closer to industrial and military spec, we are going to end up with those achievements surfing. And once the corona clears the way, revenue is going to start to rocket up.
I think this interview really explained Nano Dimension's plan. Nano service is going to be a huge thing for people that aren't buying machines, and this is going to bring a lot of revenue. This clip wasn't the whole interview, but I wanted to show you this because this guy made really good points, and this was his main points that he made. To everyone that did find this video helpful, please subscribe and hit the like button. Like I said, I'll keep you guys up to date with the latest information about all stocks like CCIV, Nano Dimensions, any other stock that you want. And if you guys do have any other stocks that you do want me to talk about, then please comment them down below. And this is all for today, and I'll see you guys in the next one. Peace.